Hello. Hello. Okay. Hmm. Hello, Assalamu alaikum students. This is Azka and I teach accounting and business to O and A level students. So for today, we are going to solve paper 1, variant 2 for accounting O levels. As you can see, this is the latest paper, October-November 2024. Paper 1, variant 2, accounting, multiple choice question, and we have 1 hour 15 minutes to solve the whole paper. Okay. So I'm going to start this paper from the very end. Okay, so I'm going to start the paper from MCQ number 35. Okay, so in the first question, what they are asking that which qualitative factors required that financial information is provided in a timely manner so that it can be used for the decision making. Okay. So now let's see the first option, comparability. So comparability is basically it refers to the ability to compare the financial information across different entities or different periods. So while comparability is important, but it does not directly relate to the timelines of the financial information. So timeline is not a primary characteristics of the comparability. So it means that this option is not the right option. Now let's see the B option. B option is the relevance. So relevance means that financial information must have the ability to influence decision making for information to be relevant. It must be provided in a timely manner so that decision makers can act on it effectively. And if information is delayed, it loses its relevance because it cannot impact decision related to current or future events. And timelines is therefore a key component of the relevance. So it means that relevance is the right option, but let's see the other options as well. The CG option is the reliability. So reliability basically focuses on the accuracy and verifiability and trustworthiness of the information. While reliable information is critical, it does not necessarily address the need for timelines. So reliable information can still be relevant if it is not provided on time. So C option is not the right option. The D option is that understandability. So understandability basically ensures that financial information is presented clearly and is easily comprehensible by users. Although understandability is important for decision making, it does not encompass the need for timely delivery of information. So that's why this is not the right option. So B is the right option. So now let's see the other one that which accounting principle is the accounting equation based on. Yes, so which accounting principle is the accounting equation based on? They are talking about this accounting equation. Assets is equal to capital plus liabilities. This is our accounting equation. Okay, so first of all, the first answer we have the duality. So accounting equation, which is assets is equal to capital plus liability, is based on the duality principle. If you see, this principle states that every financial transaction has a dual effect on the accounting records. It means that if you are purchasing any asset, like suppose if you are just started your new business, and let's say that maybe you have taken a bank loan for purchasing a vehicle or maybe the building as like you are going to invest this vehicle or building into your business. So bank loan will increase the liability Building and vehicle, because this is maybe a kind of investment from your side, so that's why capital will increase. And vehicle and building also the part of asset, so asset will also increase. So duality concept basically states that every financial transaction, this is a financial transaction, that every financial transaction has a dual effect on the accounting records. And it is like ensuring that the equation remains the balance. So that's why duality, we can say that this accounting principle is like it is really based on the accounting equation. So it like we can just take another example, that for example, when a company borrows money, assets like cash increases and liabilities, loans payable increase by the same amount. So this dual effect ensures that the accounting equation is maintained. Now let's see the going concern. So the going concern principle assumes that a business will continue to operate for the foreseeable future. While this is an important assumption in accounting, it is unrelated to the accounting equation or the concept of duality. That's why this is not the right answer. And materiality basically refers to the significance of financial information and ensures that only relevant and significant items are recorded. But however, it has no direct connection to the accounting equation or duality concept. So that's why this is not the part. The next one is the realization. So realization principle dictates that revenue should only be recognized when it is earned, regardless of when cash is received. So this principle relates to revenue recognition and not the foundation of the accounting equation. So that's why this is not the right answer. So, in conclusion, basically, duality principle forms a foundation of the accounting vision by ensuring that every transaction has a dual and balanced effect on the financial statement. That's why duality is the right option. Okay. Um, Now let's see the 33 MCQ, that who would be interested in the value of non-current assets which a business has available as security. Okay, so the first one is a bank manager. So bank manager would be interested in the value of business non-current asset because these assets can be used as a collateral or security for loans. So when a business applies for a loan, so the bank needs to assess its ability to repay, and the availability of valuable non-current assets provides a bank with a guarantee in case the business defaults on the loan. So yes, A option might be the right option, but let's see the other options as well. So in B option, the credit customers. So credit customers are primarily concerned for the business ability to deliver the goods or services and its short-term liquidity to meet the obligation, like current assets and liabilities. They are not typically interested in the non-current assets as security. So that's why this is not the right answer. And what about the employees and trade unions? So employees and trade unions are more focused on job security, wages, working condition, and the overall financial health of the company. They are not specifically interested in the non-current assets for security purpose. Uh, and the government department. So government departments may be interested in tax compliance, legal regulations, or environmental policies. They do not typically focus on non-current assets as security unless it is related to specific legal or regulatory requirements. So that's why this is not the right option. So basically, the bank manager is the party most concerned with the value of non-current assets as security, making A the correct answer. Okay. Uh, Now let's see the question number 32. Okay. So in the question number 32, now let's read the question that that Umar had an increase in his gross profit margin, and what could have caused this? Okay. So his gross profit margin has increased. Okay, so the first option is that a decrease in the selling price of his goods. So basically, gross profit margin, um, how we calculate the gross profit margin. So the formula for gross profit margin is GP divided by sales, divided by sales, or you can also say the revenue, and multiply by 100. So this is a formula for gross profit margin. Okay. So if you see the A option, that a decrease in the selling price of his goods. So if the selling price decreases, okay, if the selling price revenue, what is the format to find out the GP? Revenue minus cost of sales is equal to GP. So if the selling price decreases, but the cost of goods sold remains the same, uh, so gross profit will decrease. This leads to a reduction, not an increase in the gross profit margin. So that's why A option is not the right option. And let's see the B, that an increase in the quantity of goods purchased. So purchasing more goods does not directly affect the gross profit margin unless, like, because we know that if we are purchasing more goods in quantity, so this is the part of cost of sales. So of course it leads to changes in selling price or cost of goods sold. Simply increasing the quantity purchased does not guarantee a higher gross profit margin. And if you see the C, that a decrease in the purchase price of his goods. So if the purchase price of goods decreases, so the cost of goods sold will decrease. Okay, the cost of goods sold will decrease, leading to an increase in gross profit without affecting sales revenue, and this result in a higher gross profit margin. So C seems to be the right option. But now let's see the D as well. That an increase in the quantity of goods sold. So selling more goods can increase gross profit in absolute terms, but it does not directly affect the gross profit margin unless there are changes in selling price or cost of goods sold. So that's why this is not the right option. Okay. Question number 31. That a jewelry retailer's markup his goods by 100%. He provided the following information: revenue, discount received, profit for the year. What was the total of his expenses? Okay. So we have the revenue, profit for the year, markup, and discount received. So first of all, now, the first step, we need to calculate the cost of sales. So since the goods are marked up by 100%, as we can see, so this means the selling price revenue is double the cost of sales. So in step 2, we will calculate the gross profit, and after that, we will calculate the total expenses. Okay. So now, first of all, let's calculate the cost of goods sold. So cost of goods sold is basically if uh, the markup is 100%, so this means the selling price revenue is double the cost price. So revenue uh, is 68,200 divided by 2. So this is giving you the answer 34,100. Now let's calculate the GP. GP is equal to revenue minus cost of goods sold. And revenue is 68,200 minus 34,100. And this is equal to 34,100. So this is the GP. Now let's calculate the profit. So profit for the year is equal to GP plus, this is the formula you already know, because if you already covered your whole chapters of a whole book of accounting, so you can easily see that what I am talking about. GP plus discount received minus total expenses. So we need to calculate our total expenses. So that's why we will make this thing subject. Expenses is equal to GP plus discount received minus, this is the plus, so it will come over here and we convert it sign, profit for the year. Okay, so total expenses equal to GP is 34,100 plus discount received in 1080 And profit for the year is 18,395. So this is the equal to 16,785. So B option is the right option. Okay, so yeah. So now let's see the question number 30, that Anaya did not keep a full set of double entry records but provide the following information. So we have the opening capital, because as you can see the date, this is 1st Feb 2022, and this is the information for 31st January 2023. So this is the year end information and this is the year start information. So at the year start, if we had $10,000 of capital, so this is our opening capital. We have bank overdraft, this is liability, equipment, this is asset, inventory, this is also the part of asset, trade receivable, assets, trade payables, liability. Anaya's drawings during the year ended 31st January 2023 were $8,500. What was her profit for the year ended 31st January 2023? So now this is very simple. If maybe you are aware about its formula, that the formula for finding out the profit. Now we have basically a structure. Okay, so what is the structure here? The structure which we follow normally is we add opening capital plus additional capital. If you like invested additional capital between the year, so you will add it plus profit for the year minus drawings minus closing capital. Okay, so we have the opening capital. This is 10,000. We don't have any additional capital here. We don't have the profit as well. We need to follow it. We need to follow, we need to find out the profit. We have drawings. This is 8,500 and we don't have the closing capital, but we can find out the closing capital. How? Because if maybe you know that we have an accounting equation. An accounting equation is basically assets is equal to capital plus liabilities. But here we need to find out the capital. So that's why we will make the capital subject. And now assets, we will transfer assets after like on the left side, right side. So this will becomes in minus assets minus liabilities. Okay. So we need to find out the closing capital. And the formula is very simple. Closing assets minus closing liabilities. So as you can see, that in closing assets, we have the equipment, 20,000, 2,000 inventory, and 15,000 trade receivables is equal to 20,000 plus 2,000 plus 15,000 is a trade receivable minus liabilities. So we have two liabilities, bank overdraft, which is 1,500, and trade payables, which is 10,500. Fifteen thousand plus 10,500, this is equal to 12,000 minus 20,000 plus 2,000 plus 15,000, this is 37,000. 37,000 minus 12,000, so your closing capital will be 25,000. So now we just need to put this value here in this equation. and drawings are equal to 4,500. And opening capital was 10,000. Okay, so since we want to find out the profit, we have to do the reverse working. Previously, what we were doing, we are adding the opening capital with additional plus profit minus drawings closing minus closing capital. But now we need to find out the profit, and that's why we need to do this like work reversely. So now what we will do, before we were deducting the drawing and deducting the closing capital, now we will adding back to the closing capital with the drawing. So 85,000, sorry, 25,000 plus 85,000. We don't have profit, so we will be adding zero. We don't have additional capital, so we will be adding zero. 25,000 plus 85,000 plus 0 plus 0. And previously we were adding the opening capital. Now we will subtracting the opening capital because we are doing reverse working. So minus 10,000. So if you just calculate it, so you will get the answer, which is 23,500. The answer for the profit. So whatever you want to find, you were trying to find out the profit, and the profit for this year is 23,500. So A option is the right option. Okay. So now we are going to see the next question. Okay. So in the next question, W Limited manufactures motorbikes, and the following information relates to the first year in business. Okay. Basically, we need to find out the cost of production of the motorbikes completed during the year. So we have this information. So to determine the cost of production of the motorbikes completed during the year, we calculate the total cost of production and taking into account the purchases, wages, production overheads, and adjustments for inventory. Okay, so what is the formula for cost of production? Cost of production is equal to purchase of motorbike parts plus wages of factory workers and plus production overheads minus the closing inventory of parts work in progress, work in progress. Okay, so now we are going to insert the value. So here, as you can see, the purchase of the motorbike parts is equal to 40,000. Wages of factory workers is 25,000. Production overheads is 8,000, sorry. And inventory of motorbike parts at the end of the year, this is closing inventory, and this is 3,000. Inventory of partly finished motorbike at the end of the year, this is work in progress, this is 7,000. So now it's like very simple. We need to put the values. First of all, 40,000 plus 25,000 plus 8,000 And we need to deduct the closing inventory of work in process and the closing the parts of the motorbikes. So we have 3,000 and 7,000 in respect of these two things. 3,000 plus 7,000. Okay, so this is 10,000 minus 8,000 plus 25,000 plus 40,000. Hello. Okay. So the cost of production is equal to 63,000. Okay. So A option is the right option. Okay. So now we are going to see the next question, that after a manufacturing account had been completed, it was discovered that wages paid to factory cleaners had not been included. Okay. So which item in the manufacturing account would change after this error was corrected? Okay. So first of all, now let's understand the error. So wages paid to factory cleaners are considered as indirect wages because they are not directly associated with the manufacturing of specific products but are part of the production overheads. And indirect wages are included in the production overheads, which are then added to the prime cost to calculate the production cost. So now how this will affect the manufacturing account items. So if you see the direct wages, so factory cleaners wages are not direct wages. Okay. So this item is not affected, of course. And indirect wages, yes, cleaners wages fall under the indirect wages, so this item will increase. And prime cost includes the direct material, direct labor, direct wages, and direct expenses. So since cleaners wages are indirect wages, so this item is not affected. And production cost includes the prime cost plus production overheads, since indirect wages, like the cleaner wages, are part of the production overheads, so the production cost will increase. Yes. So it means that indirect wages and production costs, 2 and 4 is the right option. Okay. The next 27 question, that following ledger account appeared in the books of a club for the year ended 31st December. This is a subscription account and we use a mnemonic to prepare this account APA. A, P, P, A. This is opening balance. So if at the start of the year, if the opening balance is accrued income is accrued, so we will write it here. And if the income is prepaid, so we will write it here. And if the closing balance is prepaid, so we will write it here on the debit side. And if the at the end of the month or at the end of the year, if the income is accrued, so we will write closing balance here. So which statement is correct? The first option is that subscription prepaid on 1st January amounted to 2000. So as you can see, this is really 2000, but this is not prepaid, this is accrued income. So that's why this is not the right option. Subscription prepaid on 31st December amounted to 3000. Okay. So if you can see that subscription prepaid, which is 3000. Yes. So as you can see that the closing balance is showing us the prepaid amount at 31st December. So yes, this option seems to be the right option, but now let's see the others as well. C option is subscriptions received during the year ended 31st December amounted to 24,000. But no, we received the subscription in the bank, but we received $29,000 in the bank. So this option is not the right option. D option is subscription relating to year ended 31st December amounted to 29,000. But as you can see that this year's subscription is 24,000, not 29,000. So that's why this option is the wrong option. Okay, next question 26, that Daily Sports Club was formed in January. During its first year of the club purchased equipment costing 5,000 paying by the check. Which of the club's financial statements are affected by the purchase of this equipment? So receipt and payment account is just like the cash flow. So if they purchase the equipment and by check, so of course receipt and payment account will be affected. So A or B options could be the right option if you just see the receipt and payment. Income and expenditure account, okay, this will not affect. Why? Because if you are purchasing the equipment, so this is not the part of expenses, not the part of cost of sales, nothing else. So of course your income and expenditure account will not affect it. So B option seems to be the right option. And your statement of financial position will be affected because this is the new equipment. So it will increase your non-current assets in the statement of financial position. So yes, B option is the right option. Okay, which items is shown in the income statement and the statement of changes in equity of a limited company? Okay. Okay. So which item is shown in the income statement and in the statement of changes in equity of a limited company? Statement of changes in equity. So accrued interest on debentures. We will write it in the income statement, the accrued interest, but we will not write it in the changes in equity. So that's why this is not the right option. We have to select the item which should include in both. Ordinary share dividend paid. So dividend paid, we will write it in the change in equity section, but not in the income statement. Profit for the year, this is the part of income statement. We also added in the change in changes in equity. So yes, C seems to be the right option. Transfer to general reserve, this is the part of statement of changes in equity and the statement of financial position. So that's why this is not the right option. C is the right option. Okay. Uh, Now let's see the question number 24. X Limited provided the following information: ordinary share capital, general reserves, retained earning, 8% debentures. What was the total of the equity? Okay. So for finding out the total equity, What we need to do, we will add the ordinary share capital because this is the part of your equity, ordinary share capital, plus journal reserves, plus retained earnings, and ordinary share capital is $300,000, plus general reserves are 50,000, retained earnings are 35,000. Debentures will not be the part of equity. 35,000. So this is equal to 3,85,000. So C option is our. Question number 23, that which item should be entered in the appropriation account of the partnership? Okay. So in the appropriation, yes, we will enter interest on the partner's drawing. Interest on partner's loan, we will not uh, write it in the appropriation account. Partner's drawing. Partner's drawing is a part of current account, not the appropriation account. So it means that A seems to be the right option. Okay. And the next question is that what is an advantage to a trader of forming a partnership? First of all, is the continuity of existence, and decision making is quicker. So decision making is not quicker because if the two or more partners involved in the business, so they cannot take the decisions very quick. They have to consult with each other. And continuity, of course, it's not there if one partner dies. So it means that, um, of course, if one partner dies, so it means that partnership will break in terms of if any partners dies. And profits are shared. This is the disadvantage. And risks are shared. Yes, this is the advantage because you have the partner, you can share your risk with the other partners as well. So D option is the right option. Okay. Question number 21. Business provided the following information. What was the total of the current liability? So this is very easy. Current liability is the liability which we have to pay within a year. So trade payables, bank overdraft, um, and accrued wages, and rental income prepaid. This is the part of the current liability. So we add the 9,700, 2,000, 1,000 plus 500. So in total of current liabilities, you have 13,200. Sorry. Okay. Which item would appear in the income statement for an accountancy business? Okay. Which item would appear in the income statement for an accountancy business? Gross profit will not include, of course, and because this is accountancy business, it means that they are serving the others, not they're selling the products, not manufacturing the products. So that's why there's no cost of sales. There's only income and expenses. So gross profit is not there. Yes, profit for the year will be there, and surplus will not there because surplus we use for the NPOs. So C option seems to be the right option. Okay. Now let's see the question number 19. After preparing the draft financial statement at the end of her first year of trading, Lucy discovered two errors. And what was the effect of these errors on the gross profit? Okay. Damaged inventory had been valued at its cost price 340, it was expected to sell for $180. Okay. So basically, what happened here? We need to value our inventory, maybe on NRV or maybe on cost, whichever is low. So as we can see that expected to sell, the expected of selling price is 180. It means that this is the NRV. So whichever is low, we need to record the inventory on that. So if it is compared, the cost price is 340 and the NRV is 180. So it means that we need to record our inventory on NRV, not on the cost price. But we value our closing inventory is equal to 340, but it should be equal to 180. So what is the difference of 340 and 180? 340 minus 180, this is 160. So it means that we increase the closing inventory with the 160. So if we increase the closing inventory, so it means that your cost of sales will decrease. And if a cost of sale decrease, so your GP will increase. So we overstate the GP. Overstate the GP with 160. 100, next, let's see the next option. That 100 items which had been expected to sell for $12 each had been valued at their cost price of $7. Okay, so this is NRV and this is cost. Okay, so we should record it on the cost price because this is lower. Carriage inverse of $1 for each item had not been included in the cost. Okay. So carriage inverse should include in the cost price. So its cost price should is equal to $7. But we didn't record $1 like because this is 100 items. So it means that 100 multiply 1, this is $100. So you need to add $100 into it, but you didn't add it. Okay. So if basically you need to value your closing inventory with 800, but you recorded it on 700. Okay. So it means that you lower your closing inventory. If you lower your closing inventory, so it means that your cost of sales will increase. And if your cost of sales will increase, so your GP will decrease. So you understated the GP. GP is understated by $100. So here you overstate the GP with 160 and here you understate the GP with 100. So if you just find out its net effect on GP. So net effect is you first of all you overstate the GP with 160 and after that you understate the GP with 100. So if you just find out the net effect, so you basically overstate the GP with the $60. So A option is the right option. Overstated $60. Okay. What is the general entry required to close the irrecoverable debts account at the year end? Okay, so when irrecoverable debts happen, so we debit the bad debts and credit the trade receivable. Okay, so now if you want to close it down, so now what you have to do, because at the end of the year, we will be transferring the balance of bad debts or irrecoverable debts into the income statement. So income statement will be debit and bad debts will be credit because we are going to close down the account of bad debts. So this will be credit. Okay, so what is the right option? Yeah, so A option is the right option. The question number 17. Abdul is a trader and he rents out part of his warehouse to the other businesses. Okay. Abdur is preparing his financial statement for the year ended 31st December. His rental income account shows that. Okay, so we have this rental income. Um, Rent received during the year total 2750. Okay. Rental income transferred to the income statement was $3,000. What does the closing balance of rental income account represent? Okay, so basically this is a rent account and we will use APA mnemonic, and we receive basically um we received the rent during the year, which is 2750. So bank entry we will record it here. Rental income debit, credit, and bank will debit, which is 2750. And rental income transfer to the income statement was 3000. Okay, so if you can see that 3000 is the total rental income, but we only received 2750. So it means the difference between 3000 to 2750 will be minus 2750. This is 250. So 250 is basically accrued income because we need to receive it yet. So that's why A is the right option. Okay. A machine with an original cost of $10,000 had been depreciated for 2 years at the rate of 10% per annum using the reducing by, SLM. It was then sold for cash for with the loss on disposal, which is $700. A replacement machine was bought on the same day for 12,400 cash. What was the net decrease in the cash balance? First of all, we need to find out the machine's depreciation, and its rate is 10% per annum using SLM method, and it's been depreciated for 2 years. So the original cost of the machine is 10,000, as we can see. So now let's find out its annual depreciation first. This is 1,000. And accumulated depreciation, because it's been depreciated for 2 years, to multiply 1,000. This is 2,000. Okay. Now let's calculate the NRV. Sorry, NBV. Cost is 10,000. Depreciation is 2,000. Accumulated depreciation, this is the AD, accumulated depreciation, and NBV is equal to 8,000. Now we will be determining the sale price. So the loss on disposal is given as 700, meaning that machine was sold for less than its net book value. So if we want to find out the sale price, so this will be equal to NBV minus loss on disposal. So basically, I just convert this formula. If maybe you know that if you want to find out the loss, because we know that there is a loss on disposal. If you want to find out the loss on disposal, so you will use this formula, NBV minus selling price. Okay. So since we need to find out the selling price, so that's why we make this subject here. Okay. So sale price is equal to NBV is 8,000 minus 700. So this is equal to 7,300, the sale price. Okay, so now we need to calculate the net cash decrease. So proceeds from the sale of the old machine is 7,300, as we know, and cost of the replacement machine is 12,400. So there is a net cash decrease. How we can find out the net cash decrease. So net cash decrease is the difference between the amount paid for the new machine, which is 12,400, and the cash received from the selling the old machine, which is 7,300. Okay. So 12,400 minus 7,300, and this is equal to $5,100. So the net decrease in the cash balance is 5,100. Okay. Now let's see the next question, that which statement are correct about the depreciation. Okay. It is a non-cash expense item, yes, because we are not paying, we are recording the depreciation in the expenses, but it's not the cash in the form of, it's not the expense in the form of cash. That is why this is a non-cash expense. It is an estimated amount. So, yes, this is an estimated amount. We know about it because the amount of depreciation, it doesn't mean that it actually, like, it is not translating the real value of its market value. Of course, it's not. So that's why it is an estimated amount. It is the amount of money set aside to replace an non-current asset. No. It is a gradual loss in the value of non-current asset. No, even it is not the gradual loss in the value of current asset, because we only charge depreciation on non-current assets. So that's why 1 and 2 is the right option. Okay. Hamid owns a grocery store and he bought a motor vehicle for $2,000 and fuel, which is $50. Both of these accounts were incorrectly debited to the purchase account. So what was the effect of this error on the income statement for the year? Okay, so gross profit. So since $50 and $2,000, we add it into the purchases account. So if the purchases will increase, your cost of sales will increase, and if the cost of sales will increase, your GP will decrease. So we understate the GP with 2,050. 2,000 for the motor vehicle, 50 for the fuel. And how the motor vehicle expense. So we need to debit the fuel expense in the motor vehicle expense account, but we did not record it, and that's why we understated the motor vehicle expense with 50. So D option is the right option. Okay, a summary of Jim's cash book for the year included the following. We have the total checks which we paid to supplier, which is 3,750. Total discount which we received, which is $65. Which entries are made in the purchase ledger control account? PLCA. So if your PLCA increase, it will credit, and if your PLCA will decrease, it will debit. Okay. Total checks paid to supplier. So when we paid the checks to the supplier, so it means that our purchase ledger control account will decrease. So we will make the entry here. 3750. PLCA is debit and bank is credit. So, okay. So bank is credit by 3750. Sorry, we are talking about the PLCA. Yeah, so your bank will credit and your PLCA will debit. Okay. Total discount received. So when you receive the discount, your PLCA will decrease because you don't have the liability to pay the $65. So your liability will decrease, and that's why we will debit it here. Discount received 65. So PLCA is debit and discount received will be credit. So B option is the right option. Okay, and what is the advantage of preparing the sales as a control account? So basically, now let's see the A. So in A, they are saying that it is necessary to prepare an income statement. So this is incorrect because the sale as a control account is not directly required to prepare an income statement. The income statement uses total sales revenue, which does not depends on the preparation of the control account. And let's see the B. It helps to reduce the possibility of fraud. So preparing a monthly sale at a control account provides a summary of all transactions related to trade receivable, credit, sales, payments received, discounts allowed, etc. So by reconciling this control account with the individual trade receivables accounts, discrepancies can be identified, which can help detect and reduce the possibility of fraud and errors. So B seems to be the right option. Let's see the C, that it provides a check on the accuracy of trade payables accounts. So yeah, this is incorrect because the sale as a control account deals with the trade receivable customers, not trade payables. So the period as a control account is used for the trade payables. D is that it shows the total of the cash sale and credit sales. So this is incorrect because sale as a control account only tracks credit sales and related transactions. Cash sales are not included in the sale as a control account. So this is the wrong option. Okay. Uh, Bank column of trader's cash book showed an overdrawn balance of $1,200 when the trader compared the cash book with the bank statement. He found the following items were not included in the cash book. So there's a bank charges, credit transfer, direct debit. So what was the balance brought down in the bank column of the cash book after it was updated? Okay, so initial overdrawn balance is 1,200. And overdone balance is credit balance because the bank account is in deficit. And we need to update the cash book with the following items, which that were not included. Bank charges. So bank charges, we need to deduct it. The $100 we need to deduct it. This is an expense and reduces the balance further. And credit transfer is 400. This is the receipt, incoming money, and it increases the balance. And direct debit is $60. It is also a deduction because this is another expense, reduces the balance further. So now what will be the updated balance? Initial balance, which is minus 12,000, okay. And a bank charges, which is minus 100 plus 400 minus 60. So the updated balance will be is equal to minus 960. Minus 960 means the credit. 960 credit. Okay. The bank statement of a business had a credit balance of 2690 on 31st October. At that date, checks issued which had not been presented. This is unpresented checks, which is $850. What was the bank balance in the cash book on 31st October? So bank statement balance, which is credit, which is 2690. So a credit balance on the bank statement means the business has a positive balance in the bank. So unpresented checks are $850. So these are payments recorded in the cash book but not yet proceed by the bank. So therefore, cash book balance will be lower than the bank statement balance. So if we just want to find out the cash book balance, so this is equal to bank statement balance minus unpresented checks. Bank statement balance is 2690. This is a positive balance minus 850. So this is 1840 debit because it's a positive balance. This is the cash book balance. Okay. Now let's see this next one. Okay. So traders draft statement showed a profit for the year for 12, of 24,500. The following errors were later discovered. What was the collected profit for the year? Okay. So this is the draft profit. Okay. So first of all, no adjustment had been made for accrued income, that is 8,000. Okay, so we haven't, this is, okay. So basically we haven't recorded this accrued income and it should be recorded in the other income. So it means that if the other income is increasing, so your profit is also increasing. So that's why we will add 8,000 into it. So this is equal to 2450 plus 8,000. Sorry, 24500 plus 8,000. Okay, so this is equal to 32500. Okay, and the next one is the carriage inwards of 250 had been recorded as carriage outwards. Okay, so carriage outward means like carriage outward, we need to record it into the expenses, and carriage inward, we need to record it into the cost of sale. So, carriage inward of 250 had been recorded as a carriage outward. Okay, so you haven't recorded the carriage inwards in the cost of sales. So it means that you decreases the cost of sales and you overstated the GP, and that's why you overstated the profit as well. So it means that we need to deduct 250 from the profit, from the draft profit. And now what happened here, that you recorded this 250 into the carriage outwards and you overstated the expenses, and that's why you understated the profit. It means that we have to add back 250 as well. Minus 250 or adding back 250 as well. Increase in the provision of debts of 120 had been treated as an addition to gross profit for the year. Okay. So what happened here, if the provision for doubtful debt is increasing, if the provision increases, so it is increases the expenses as well, and it is decreasing the profit. But what happened here, you increases the GP. You enter this $120 in the GP, you increases the GP, and that's why you overstated the profit. Profit is overstated. Profit were overstated. Now what we have to do, we have to record it into the expense, as well as we need to deduct it from the GP. So it means that we have to make the entry with a double amount. So 120 plus 120 is equal to 240. So we need to minus the 240 from this. Okay. So because we need to reduce the GP as well, and we need to increase the expenses as well. That's why. Okay. So if you just calculate this, so you will get the answer. Just give me 1 second. Minus 250 plus 250 minus. Okay, this is equal to 32,260. So B option, the corrected profit for this year is 32,260. Okay. Okay, so a trader had prepared her year-ended financial statement. She later discovered that an adjustment to reduce the provision for doubtful debt by 100 had not been made. So this is basically the part of other income. So how did this error affect the trader's statement of the financial position? Okay, so if the provision for doubtful debts is decreasing, so your current assets should be increases. Okay, so if you haven't record this reduction in provision, so it means that you basically understate the current assets because you need to deduct this $100, sorry, add this $100, but you didn't, and that is why your current assets was understated with the $100. And since this is also a part of other income, so if the other income increasing, so your profit will also increase. And if the profit is increasing, so your capital will also increase because we need to add the profit into the equity section in the statement of financial position. So your capital will also increase. But you haven't recorded. So if you haven't recorded, so you understate the profit. And if you understate the profit, so it means that you understate the capital as well. Okay, so D option is the right option. As you can see, understated the current asset, understated in the capital. Okay. Oh, which items appear on a debit side of a trial balance? Okay. Accounts owed from the credit customer. This is a data receivable will record it on the debit side. Yes. Discount received from the credit supplier. This is we will record in the credit side because discount received means income and income has a credit nature. Drawings made by the owner. Yes, drawings will be debit in the trial balance. Overdrawn balance at the bank, and this is the liability, and liability will credit, and that's why this is not the right option. So 1 and 3. Okay. Now let's see the other. What is the advantage to a business of maintaining a books of prime entry? So the first one is that a trial balance can be extracted directly from the books of prime entry. So this is incorrect because trial balance is extracted from the ledger accounts, not directly from the books of prime entry. So the books of prime entry are used to record transactions before they are posted to the ledgers. B is that similar transactions are listed together in the date order free for reference. So this is correct because books of prime entry such as sales journal, purchase journal, and cash book group similar transactions, for example, or credit sales or credit purchases. So together in date order, making them easy to review and reference. C is that there is no need to make the double entries in the ledger. So this is incorrect because double entry bookkeeping is still required in the ledger to ensure accuracy and completeness of financial records. So the books of prime entry are just an initial record, not a replacement of the ledger. D is that trade receivables are trade payables totals are readily available. So this is incorrect because trade receivables and trade payables totals are ultimately derived from the sale ledger and purchase ledger, not directly from the books of prime entry. Okay. Which document? Okay, so Ranjit, a credit customer of Balbir in Apple. Following activities took place. Balbir sold goods on credit to Ranjit. Ranjit advised Balbir that some of the goods are damaged. Balbir advised Ranjit of a reduction in the amount owing. Which document were used to record these activities? Okay. So Balbir sold goods on credit to Ranjit. So of course, which document we will use? We will use the invoice. Because an invoice is issued by Balbir to Ranjit to record a credit sale and request payment. And the next one is Ranjit advised Balbir that some of the goods were damaged. So the debit note will use in this scenario. Because a debit note is issued by Ranjit, the buyer, to Balbir, the seller, to inform Balbir that the damaged goods and request a reduction in the amount owed. The last one is that Balbir advised Ranjit of a reduction in the amount owing. So here we will use a credit note. So credit note is issued by Balbir to Ranjit to acknowledge the reduction in the amount of Ranjit owes due to the damaged goods. So, um, uh, like, so which option is the right option? D option is the right option. Invoice, debit note, and credit note. Okay. So on 15 Feb, Kalu made the following entries in his account. Bank debit, discount allowed debit, and credit the Rokba. Okay. Which transaction was being recorded? So basically, if you see the debit entry 28, this indicates that caller received 28 in cash check, which increases the bank balance. This suggests a payment was received. Discount allowed of $12 means that discount allowed is an expense for Kalu, because meaning that he gave discount to the customer Drogba. This indicates that a cash discount was given to a Drogba for early payment. And the Drogba on credit side means that Drogba account or trade receivable is credit, reducing the amount owed by the Drogba to Kalu. So this shows that Drogba settled his their outstanding balance of 240. But only paid 228, taking a 12% $12 cash discount. Okay, so A option seems to be the right option, that the Rogba paid Kalu by check after taking a cash discount. But now let's see the others as well. That the Rogba paid Kalu by check after taking a trade discount. So a trade discount is applied before recording the invoice, and it is not recorded in the account. So therefore, this option is incorrect. C is that Kalu paid the Rogba by check after taking a cash discount. So this is incorrect because entry shows that Kalu received payment, not made a payment. D is that Kalu paid the Rogba by check after taking a trade discount. So this is incorrect because it suggests that Kalu was payer, but the entry clearly shows that Kalu received money from the Rogba. Okay. Uh, which account is not kept in the nominal ledger? So first of all, the capital account. So the capital account is a part of nominal ledger as it is related to owner's equity in the business. So that's why we will identify the account which is not kept. B is basically the cash account. It is not kept in the nominal ledger. Instead, it is maintained in the cash book, which is a separate subsidiary book used to record all cash and bank transactions. Inventory account is a part of the nominal ledger. It is used to track the value of goods held by the business good, and it is adjusted during the preparation of the financial statement. And purchases account is part of the nominal ledger as it is used to record goods bought by the business for resale. Okay. The next one is a trader bought new fixtures. He paid half of the purchase price in cash and agreed to pay the balance at a later date. So how does this purchase affect the accounting equation? So trader basically bought new fixtures. So of course fixtures are an asset. So buying new fixtures increases the total assets. So he basically paid the half of the purchase in price in cash. So paying cash decreases the cash balance asset. So however, since the cash decreases is offset by the increase in fixtures, so the total assets will still increase. And he agreed to pay the balance later. So the balance to be paid becomes a liability, which increases the total liability. And there is no effect on the owner's equity, at this transaction only affects the assets and liabilities. So D option is the right option. The first one is that a trader prepares a financial statement each year. So what do these help the trader to do? Okay. So the first one is calculate the amount owing to the credit supplier. So while the financial statement includes the total trade payables in the statement of financial position, so the primary purpose of financial statement is not to calculate individual amounts owing to suppliers. This is typically done using the purchase ledger. B is that calculate the cash drawings. So drawings by the owner are recorded separately in the books of accounts and may appear in the capital account or the financial statements. However, calculating cash drawing is not the main purpose of preparing the financial statements. C is the check the bank statement balance. So the financial statements do not include the bank balance, but reconciling or checking the bank statement balance is not their purpose. So this is done through the bank reconciliation. Make decision about the future. So primary purpose of financial statement is to provide a trader with a clear picture of the financial performance, profit and loss, and position like assets, liability, and equity of the business. So this information helps to helps the trader to make informed decision about the future of the business, such as expanding operations, managing the debts, and investing in new assets. So D option is the right option. Okay, so I completed the whole paper, and there's a good news that I'm going to start my past paper session, which is going to start from the 15th Feb. So if you are interested, so you can take a part, you can grab your seats, and we will be doing the past paper sessions, and we will be dissecting each, and like we will be starting from 2017's past paper. Okay, goodbye.